gotten some real mixed signals from retail this past earnings season. Some chains are doing very well. Some chains are doing very badly. For example, apparel sold terribly at Kohl's. Sold great at Target. I've been telling you not to extrapolate from any individual retailer, but what about an apparel play with broad exposure to the industry? Take PVH, company behind Calvin Klein and Tommy Hilfiger. This stock's had a real roller coaster of a year, although it finally bottomed to 67 in August, and since then it's been on fire, rallying up to $100 as of today in anticipation of a good quarter. PVH just reported at the close, and a good quarter is exactly what we got. Company posted a solid top and bottom line beat, with management raising their full-year earnings forecast, calling for 4% same-store sales growth on a constant currency basis. Europe, amazing. Tommy, on fire. Calvin Klein, better than feared. I found these numbers pretty darn encouraging. Do not take it from me. Let's dig deeper with Emanuel Chirico. He's the chairman and CEO of PVH. Find out more about the quarter, where his company's headed. Mr. Chirico, welcome back to Mad Money. Good to see you, Manny.
Good to see you.
Thank you. Have a seat.
How are you?
All right, Manny, I'm a little thrown. Because to me, these numbers indicate that the market is anything but promotional, and yet you call it competitive and promotional. I think the United States is. But your broad panoply of business, clearly, you can't call it promotional if you're doing the kind of numbers you're doing with Tommy Hilfiger.
Yeah, well, that's a fair call out, Jim. This North American market, but I would also say we have a big exposure in Greater China.
Right.
And the challenges we're facing there with Hong Kong and the China consumer in general, that's what we were talking about. Our fourth quarter plan, holiday, I think we've tried to take a conservative approach to it.
Right.
If the trends that we're seeing continue, we'll do better than we're projecting. But we felt, given the uncertainty that's out there around so many different things, including 6 less shopping days between Thanksgiving
that's a
and
good point.
all these things, we just felt we had a really strong third quarter. Let's put that through and let's hold tight on the fourth quarter.
How about mall versus non-mall, mall versus online? Because what I'm seeing is that the promotions in the mall are amazing, but some of the other guys aren't that promotional.
Well, I guess I have to just differ a little
bit.
I think
you're in the business.
Your opening segment talked about there's some strength and where there's some weakness. I don't think it's all on mall or off mall, because some of the players you described had tough off mall performance as well.
Yeah,
apparel, I have to be honest, apparel has been a segment that's been under more pressure than others. And I think, to be honest, this time last year, such strong business going on in our sector. We all bought into a bit of that trend, and we've been cleaning inventories, having to deal with margin pressures as it's gone forward, and I think that's finally behind most of us. You can see from our balance sheet, inventories in line, and we're projecting year inventories to be flat to down slightly. So I think we've got the business back in a good place.
Well, that's perfect when you're going right into Christmas. You don't want to hear big discounting. I would use some more cold weather. There was too much warm weather at the beginning.
Yeah, look, I think that really did impact, especially at the beginning of the third quarter. We always want to see the season get started, get some really brisk cold weather, and get off to a strong start. So that backdrop, clearly you saw some of our key customers have a tough time with it.
Okay, how about Europe? Because it looks like it's extraordinary.
Yeah, our business is just off the charts.
How's that
It's it's the strength of the Tommy Hilfiger brand overall. It's a 2.2 billion euro business there, and our Calvin business, which is about half the size, also continued to grow into that. So we saw, double-digit top line growth there, continued growth in margins. We feel really good about that business.
All right, I've been letting you go on Heritage, but down 13%, and I know you've got this Izod commercial with that second-rate quarterback from last night.
Had a tough night.
Well, that could hurt your sales, that guy. That guy. We'll take that offline. But do I have to start worrying about Heritage?
Look, I think that Heritage is a reflection of what's going on in mall retailing. Our key customers, Macy's, Kohl's, JCPenney, that business is struggling. It's about 10 to 12% of our sales, less of our profits. It's a small piece. I think we have to contain that it won't hurt us. But this time last year, it was doing so much better. So it's caught up in the whole retail dynamic in North America.
Now, where are you making stuff these days? How much China? How much other places?
Our exposure in China for America is probably between 10 and 15%.
That's pretty low.
As we go into 2020.
So you've been whittling that down the whole time.
Yeah, I think if you go back 4 or 5 years ago, we were closer to 35 to 40%.
Well, if the president's listening, he's got to be happy.
Well, yeah, look, I've got strong feeling. I don't think the way to resolve these things is through tariffs. I know the president keeps saying, well, tariffs aren't impacting the economy, but to be fair, the tariffs haven't really hit the economy at this point. I mean, there was those initial tariffs, $50 billion of goods that got taxed at 15%. But now all of a sudden, in December of this year, tariffs coming through on apparel. We've got about $500 billion of goods that are going to be tariffed. It's going to have an impact on the consumers. I think we could all manage it in the short term with the hope that it would resolve, because you could put pressure on your vendor base to do certain things. But long term, it's got to work on both sides. So it clearly will result in higher costs for the consumer, which is not good for the economy.
No, it might hit that by the time of the election.
And what the worst part about, Jimmy, is the uncertainty. I'm sitting here on December 1st, thereabouts, and I don't know what my costs are going to be on January 1st.
That's crazy.
Because, is it a 15% tariff, is it a 25% tariff, or is it a 0% tariff?
Well, this is why the enterprises hurt. Big companies like you, they don't know what to budget.
Exactly.
Can't put budget. You're not going to go out there and start being big spender. Now, you have taken, I don't want to call it a downsizing, but the restructuring Calvin Klein done is huge. Impact?
Look, I think you started to see the impact this quarter. Sales were only up 1%, but earnings were up 7%. See improved margins. We've moved out of some product categories, and we've also licensed product categories to G3 on the women's side in our jeans business, which I think is going to be a big win for both us and for them. Sell-throughs there have been great. And the overall profitability and margins in North America in this tough environment, Calvin, if you look at our operating margins, they're up about 400 basis points.
It's huge
so we're in
apparel.
good shape.
In the meantime, when the stock got to 70, someone thought the stock was pretty cheap, huh?
Yeah, look, I made a personal decision to invest $10 million in PVH.
You called the bottom, man. You know that. Come on. Didn't you buy it right around there?
I bought it as soon as I could, right after the earnings release that came out.
Did it even come with a 6 handle, or was it in the 70s?
No, it was a 7.
That's a good buy.
Yeah, and look, it's just the faith I have in the business model, the diversity of our brands, and our people. I mean, what else is there in this industry? And I think, look, our long-term multiple has historically been between 14 and 17 times earnings. Even with this improvement, we're trading at just slightly above 9 to 10 times.
Crazy.
But
in all the years
I
I've known you.
understand that because of all the uncertainty. People are just don't know what it is. So personally, I can take a longer-term view, look at it and say, over the next 18 months, I know we're going to be competitively positioned, and our multiple should move to 13 to 15 to 16 times earnings.
I know Jamie Dimon got incredible credit for when he called the bottom. You didn't get enough because, boy, that was some great buy. But, faith in yourself and your people. That's what did it.
It's only on paper now because I'm not a seller.
No, you're right, but that's all right. I want other people to be buyers. That's what I care about. That's Emanuel Chirico, Chairman and CEO of PVH. We flagged that buy for you when he made it. Boy, that was smart, but it may not be done. Mad Money's back after the break. Thank you.
Thanks, Jim.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.